Okay, hi everyone. This is Bobby Lee Bitcoin. Welcome to my podcast. This is a new episode of the Bobby Lee Bitcoin podcast. And today we have a very special guest, Jeremy Cooper. He is a estate planning attorney. And thank you for being on my show to talk about Bitcoin and crypto. And we can talk about your background, estate planning, and how it relates to crypto. Okay?
Sounds good. Thank you for having me.
Yes. So how do you want to start off? What kind of topics, questions you want to cover first?
Good question. So there's probably a lot of things I'd like to talk about. If we're just jumping right into Bitcoin,
Yeah.
then I have been reading and listening to your book
Thank
recently.
you. Yes.
And I've really enjoyed it, by the way. It's been very helpful for someone like me that's a beginner in this space that had not a lot of knowledge in the arena of Bitcoin. I used to listen to the Economist podcast pretty regularly, and they would have a little snippet about Bitcoin here and there. And so I was aware of it going back probably, I don't know, 8, 9, 10 years ago. So it wasn't that I'd never heard of Bitcoin. I just, in listening to the Economist talk about it, it sounded like it was a kind of a fad that was not really going to take off. At one point, I think I even remember hearing about, and I don't recall now what had happened, but it sounded like it was on its way out. And then all of a sudden, within the last few years, there's just been a lot of talk and excitement and action surrounding Bitcoin, and it's become a lot more relevant in the world at large, and as well for me as an estate planning attorney.
Yeah.
Because as you probably know, as estate planners, a lot of what we do is we deal with people's assets, and we help people keep those assets from going to probate, or we try to protect them through certain types of structures involving trusts and limited liability companies. And to really do estate planning and asset protection correctly, a big piece of that is titling assets in the different legal entities that you set up. Cryptocurrency, Bitcoin, that's been a bit of a challenge for the estate planning world. And I think the law in general as you well know and have talked about in your book is a little bit behind the curve when it comes to Bitcoin and cryptocurrency. And I'm not sure we quite know how to deal with it. We've come up with some ideas on how to handle that in terms of titling, but it's a little bit of an enigma to me still in terms of what Bitcoin actually is. Is it an intangible asset? I mean, there's the tangible piece to it as well. I hear about hot wallets and cold wallets and digital wallets, and so I get a little confused and wanted to at least explore that topic with you. Sure. That's kind of more, I guess, on the professional side of things. But even, before we get to that, just talking about things from me as an individual, and in listening to your book, talking to some other individuals, just kind of paying attention at a high level to Bitcoin over the last couple of years, I'm interested in, especially now that you can buy fractional interest, and maybe you could in the past as well, and I just wasn't aware of it, but it seems that there's more platforms in place that allow you to actually purchase it. And so I wanted to get your take on that for someone like me who'd just be entering into the Bitcoin market, what you recommend I try to do. Sure.
Okay, just to go back, recap a little bit. So the book is called The Promise of Bitcoin, published this in last year in 2021. And the audiobook version just came out. In fact, I think it came out just in May. Mm-hmm. And I narrated it myself, so I spent a good week and a half almost getting that done.
I now that we're talking about it, just real quick, shout out to you on the narration. Well, the book itself, very well written. As an attorney, I read a lot. Law school, we read tons. I still read a lot, and I was very impressed with the style of writing, the way that you broke things down in a way that was easy for someone like me to understand. At the beginning, spelling out your family's history and what really you added a really nice personal touch to the book. I mean, it reads as, it's not just for, I think, like tech geeks or people who are very nuanced in this space and want to get into the nuts and bolts of Bitcoin. While it does that, it does it in a way to where it's not intimidating to someone who's not familiar with things. And your voice it's nice to hear your voice on the audible narration. I did appreciate that, and I ended up listening to more of it than I would normally listen to. I usually like to actually read the books, but I don't know. I enjoyed that part of it as well.
Great. So you should go leave me a review. We should transcribe what you just said there and put it in a review on Amazon.
Let's do it. Yeah, sounds good.
Yeah, great. So you're new to Bitcoin. You've heard about it for a few years now,
right.
and you're looking to invest and make the move to start investing and buying Bitcoin. Is that right?
Correct.
Yeah, I think it's a great idea, right? Mm-hmm. I've been investing in Bitcoin for many years now. Close to a decade, or a little over a decade. I've gotten to Bitcoin in 2011.
Right.
And in recent, as you or others may know, there's been a price correction. Bitcoin price have come down a bit in the last few in the last few days and weeks and months. So this is not a bad time to get in. Now the caveat is Bitcoin is very volatile. In fact, I have a huge several chapters that talk about volatility. So just be prepared. Mm-hmm. Most people who buy Bitcoin, whatever time they buy, they end up, there's a point in time after they purchase where the price goes down. So it goes underwater.
Right.
So just be prepared for that mentally.
Mm-hmm.
So don't ever expect to buy Bitcoin at the low because you don't know when the low is, so to speak.
Okay.
Right. But as long as you have a medium to long-term time horizon, 5, 10, 20 years, then I surely think that this asset class will perform well for you, Bitcoin.
Yeah. That's what I gathered from your book as well. And I'm not looking for any quick gains in short-term
That's good.
investment strategy. I would be getting into it for the long haul.
Good.
Which kind of leads to another, I guess you addressed this in your book, but I'd like to talk to you about this as well, is the concept of Bitcoin or cryptocurrency in general. It does seem like it's the way of the future to me, that it's going to become more and more relevant in our lives. And we haven't, I guess, figured it out as a whole yet exactly how that will work. I know it's not really a fiat currency, and I don't even know that I totally understand what a fiat currency.
Well, let's talk about that.
You're the expert.
So fiat currency is a name we give to what we consider as traditional money, like the U.S. dollar, or if you travel to Europe, it's called the euro over there.
Yep.
And other countries like Japan has the Japanese yen. In fact, the UK has the British pound. So these different countries have different currencies. They're issued by their regional or national central bank, and they're nominally backed by some gold and some power of the economy. Mm-hmm. Okay, so the word fiat means that the value of those currencies declared by fiat. There's no true backing to gold. To the U.S. dollar or euro.
Right.
Whereas before, about 50 years ago, there was.
Right.
So prior to 1971. Actual U.S. dollars were backed by gold, that you could go to the so-called window, the Federal Reserve window, and redeem your U.S. dollars for gold at a fixed price, and you could redeem it, French francs and British pounds and all that for gold. However, the gold window closed, so today we're in a fiat currency world.
Right.
And what we're finding is, and by the way, we've only been in this fiat world for 50 years,
right.
51 years coming up this August. Okay. So in the last 51 years, we are in a fiat currency world, meaning the money we use that's in our pocket, that's in our bank account, in our checking and savings account, that money is unlimited. Right. The Federal Reserve, they keep printing more money, quote unquote. Mm-hmm. And this is not just the Federal Reserve, the central bank, all these other central bank government central banks all around the world, they're adding more money supply to stoke up the economy. But the result is inflation. And we're finally seeing it, right? Yep. In the last few weeks, we see the CPI and all that stuff.
Right.
So with high inflation, we see the devaluation of money itself, the purchasing power. Gas prices go up, housing prices go up, grocery prices go up, coffee, fast food, all these prices go up. Minimum wages should be increasing as well and all that. So it's doing this funky thing where money isn't worth as much as it used to be.
Right.
But for cryptocurrency, for Bitcoin, I think Bitcoin stands on its own in terms of cryptocurrency. Yes, Bitcoin is part of cryptocurrency. But however, in cryptocurrency, there's a lot of other what I call shitty coins. And Bitcoin to me is the king, the reserve. And for Bitcoin, what's interesting is, unlike fiat currency, Bitcoin has a maximum of 21 million.
Right.
So let me repeat. So Bitcoin was designed to only have 21 million units of Bitcoin in circulation. Now that sounds like not too much for the whole world, but the reality is each Bitcoin can be broken down into smaller units.
Right.
This is where you talked about the fractional stuff. So a lot of people don't know that. You can actually buy Bitcoin in units, smaller units than one Bitcoin. You could buy a 10th of a Bitcoin, a 20th of a Bitcoin, 100th of a Bitcoin, even 1,000th of a Bitcoin. So with Bitcoin floating between $20,000 and $30,000, 1,000th of a Bitcoin would be like $20 to $30. Right. Even when 10,000 of a Bitcoin would be like $2 to $3. So that's a concept. Yeah. So you don't have to buy. You don't have to spend over $10,000. You can invest smaller amounts.
Right. And that's what I'd probably do is something on that level is just to get started. I know in your book you talk about how you generally recommend that someone getting in do as much as they're comfortable doing and really go after it. And I don't think I'd be opposed to that, but I want to get my feet a little bit wet first. I don't know exactly what Bitcoin's worth today, but I know I've heard it's come down a little bit.
Yeah.
And so it seems like it could be a good time to get in, but the whole discussion about volatility is not lost on me. And I've been I set up my own little just Robinhood account a few years ago to just mess around with some stocks. And so I've seen that go up and down over the last few years, and I get how that works, and wouldn't be expecting anything a lot different.
Well, Bitcoin's going to be even more volatile than the stocks.
Yeah, so for me, it's just more I'll check it on occasion, but I would have no intention of selling it anytime soon.
Yeah.
So that's at least what I'm thinking as of now.
Yeah. So you could buy, I believe you can buy Bitcoin in Robinhood. You can also open an exchange account at Coinbase, Gemini, or Kraken. So those are all well-known exchanges in the U.S. market, and you could buy Bitcoin that way by transferring money to those exchanges. It's kind of like a brokerage account specifically for cryptocurrency.
Right, and that's what I was thinking I would do. I don't know if you have a recommendation on any of those or if it's something you'd want to even share, but I wasn't, it looks like on my Robinhood account, I can't buy crypto at all, at least the way I've been trying to get to it. And I haven't tried really hard, but, and so I was looking at one of the other platforms. Yeah.
So the exchanges are probably the better way.
Yeah.
You can buy actual cryptocurrency, Bitcoin and others. So the three top names are Coinbase, Kraken, and Gemini.
Okay.
So those are the three sort of most respected exchanges in the U.S. market for Americans.
Okay.
Yeah.
And so with those, you're actually buying Bitcoin, whereas with Robinhood, are you not actually buying Bitcoin? Is that
I haven't used Robinhood myself. I was under the impression Robinhood did support it, but maybe they don't yet.
I think they do in some places, just not all. Like there's geographic.
Oh, I see. Some limitations depends on where the state residents and so on. Yeah, I think Coinbase should be good. Yeah, try those other ones. Okay. Gemini, Kraken. I think they should all be good. For all 50 states, I think.
And much. So maybe this gets back to what I was asking about earlier. But so if I say I use Coinbase, is that what's considered a hot wallet or?
Yeah, good question.
Okay.
So Coinbase is an exchange. A cryptocurrency exchange like Coinbase is basically the brokerage firm. It's a marketplace where people go and buy and sell cryptocurrencies such as Bitcoin.
Okay.
So by opening an account on Coinbase, you would have to you're going to be an investor buying Bitcoin. So you would bring money onto the platform, either via a wire transfer or like an ACH money deposit. Okay. So you bring that money onto Coinbase, and then from there you would then ask you would then specify how much you want to buy in dollar amount or Bitcoin amount. Once you buy it, Coinbase or any of the exchanges will hold the cryptocurrency for you. It's what they call a custodial exchange. They have custody of your assets. You have a banking relationship with the exchange. It's no different than Wells Fargo or Bank of America, where your money is in your account at the bank. So in the case of Coinbase and Gemini and Kraken, your cryptocurrency, your Bitcoin, is in an account at this exchange. Right. So you own it from legal title perspective, but you don't actually have it in your own hand.
Right.
So the equivalent would be you have your money in your bank, but let's say you want to have the money in your own hand, you have to go to the ATM, go to the bank teller, and withdraw the cash as paper bills. With Bitcoin, there is no paper bill version of it, so you would actually request to the exchange to withdraw the Bitcoin electronically by giving the exchange your deposit address for your wallet. And this is where Ballet comes in. So Ballet, my company, we make physical wallets for storing Bitcoin and cryptocurrency. So if you own one of these Ballet wallets, you could buy these on Amazon, then you would be able to ask Coinbase to withdraw your Bitcoins from Coinbase onto this wallet, which you could safe keep and hold yourself at home.
So this is the wallet itself. It's a tangible.
Yeah.
I guess it's kind of like a card.
Yeah. Why don't you open this? There's an acrylic protective case on it. You can open it. So it's the size of a credit card.
Okay.
It's kind of hefty, right?
Yeah.
Nice
it's
and
very
heavy.
solid.
Yeah.
And
this
so
this is the gold edition, so it's real 24K gold plated.
oh wow.
Yeah.
Okay. Yeah. And so I would take Bitcoin off of Coinbase. It would
put it on
be
here.
stored on here.
Yeah.
And now I could transfer this to whomever is willing to accept this.
So great question. So this becomes this wallet card becomes, think of it as a capsule for holding your Bitcoin.
Okay.
So the card has all the technology and the private key and the cryptography needed to hold the Bitcoin safely. Okay. And you tell Coinbase, send it to this address. The address is printed on the sticker, or you could use a QR code scanner to scan it, copy paste into Coinbase and withdraw it. Or you could use your app, Ballet Crypto mobile app. Okay. Now, however you do it, once the crypto's in here, it's locked in here.
Okay.
Remember, let's say you have some fraction amount of Bitcoin. The value of the Bitcoin will go up and down over time based on the price, but the amount of Bitcoin will remain the same on this card as long as you own and hold the card.
Okay.
Okay. So the idea is you hold this card as an investment in Bitcoin.
Okay.
So you want to hold it for however long you plan to hold your Bitcoin, whether it's 2 months, whether it's 2 years, or even 20 years. You're holding this card. On the day you plan to sell your Bitcoin, then you would use this card. You have to peel off the sticker, scratch off the bottom, and use your app. Then you can electronically then transfer the Bitcoin back to someone else.
I see.
Whether by then you want to send it back to Coinbase or send it to a friend or family or another wallet or another exchange, you could do that electronically. But as long as you don't touch the stickers and all that, the Bitcoin is in this card. This is what you can hold yourself or give it as a gift to someone.
I see. Okay. But if I lose this, excuse me.
If you lose it,
you lose the Bitcoin?
Yes. So with these cards, we've turned my company through this invention wallet. We've turned digital cryptocurrency, which is like a virtual currency, into something physical and tangible. So we turned it into a bearer asset, like a bearer bond, like a physical bearer bond. So now, by having the Bitcoin cryptocurrency on this wallet, it becomes a bearer bond. So at the same time, it's no different than a piece of $100 bill or a gold coin. If you lose it, you lose it. Right. So don't lose it.
Can I take a quick break? I apologize.
Yes. Okay. Let's take a quick break and we'll be right back.
So
so welcome back. So back from a short break. So yeah, Jeremy, you're gonna say.
I was just understanding this is very helpful because it's like you're saying, it's a bearer bond. So it's really whoever holds or has possession of this is considered the owner.
Correct.
And so I'm thinking about this now from an estate planning standpoint.
Yes.
And in some ways, this does make it easier to deal with from an estate planning standpoint.
Let me make a point. Bitcoin has always, by itself, Bitcoin has always been a bearer asset.
Okay.
However, historically, Bitcoin has been a digital bearer asset.
Okay.
Digital in the form of it's virtual, it's online, stuff like that.
Yeah.
So it's never been a titled asset unless the digital Bitcoin was at an exchange account like Coinbase, in which case your account is titled to your name.
Okay.
So in the case of probate, in the death of the owner, the account might be passed to their beneficiaries through a will or whatever probate. So when Bitcoin is held in custody by someone else, that's a titled account asset. However, when Bitcoin is in digital form, in a traditional Bitcoin wallet, hot wallet, cold wallet, or a physical wallet, it's always a bearer asset. But what Ballet does, it makes it into a physical bearer asset. So now I could physically give it to someone, and that's a bearer asset.
So is this considered a cold wallet then?
This is a cold storage wallet. All that means is that the Bitcoins are on here, the credentials here, and it's not connected to the internet. It's cold and isolated.
Okay.
So a hot wallet or warm wallet would be something on a device that's live connected to the internet. It's considered hot on the wire.
Makes sense.
Yeah.
Okay. So say you pass away, in order for someone to be able to take this and use it, is that possible, or do they need to know some kind of? See, this is where I also get a little confused with the blockchain, and maybe you can explain a little bit more in detail about how the blockchain works and how you need certain codes, as I understand it, to be able to access Bitcoin.
So traditionally, Bitcoins are stored on the blockchain, and to access it, you would have to have the credentials to own that Bitcoin account.
Okay.
It would be like what they called, it's technically called a private key, but you can think of it as a very long password or passphrase. So when someone owns Bitcoin, they own they have possession of the private key for that Bitcoin account. It's a very, very long sort of string of numbers and letters, uppercase, lowercase, and that's a private key.
Got it.
Now, In those cases, if they memorized it or have it on some encrypted hard drive or device, USB drive, if that person were to pass away, they might take their Bitcoins to the grave with them because their descendants, their spouse, their children may not get access to it. And by the way, that's happened to a lot of people.
I've heard about that happening.
Crazy, it's craziness. It's very sad because they invest in Bitcoin early. It's gone up in value, yet they pass away unexpectedly, yet their family cannot benefit from that. It's terrible.
Yeah, that's awful.
It's awful. So what we've done with this wallet, if we've turned that Bitcoin, if you move it onto this wallet, all the credentials, the passphrase, the private key stuff is actually on the card itself.
Okay.
This card is a physical manifestation of the information needed to retrieve the private key. And there's no further memorization of password of it.
Okay.
So in other words, just to be clear, once you put it on this card, there's no external password to lock it up.
Got it.
Because if you have an external password, you may think it's safe, but it's actually dangerous because if you were to pass away unexpectedly, hit by a bus, then your spouse and kids cannot get to it. So that's why we're proud that this card is a bearer asset. If you get it, you scratch it off, peel the sticker, you have full access to the funds.
Yeah. Okay. So that's really actually, I think for the first time, I'm starting to piece together a little bit how these two worlds of it being intangible and yet tangible kind of merge together. And so the real asset then is the ability to access the blockchain without that, you don't have anything. You have to be able to access the blockchain in order to be able to use the Bitcoin.
Correct.
Is that accurate? Okay.
Yeah, you have to have the private key, which gives you the credentials to access the blockchain and move the coins.
Okay.
Because in the end, the Bitcoins are all on the blockchain.
Okay.
It's a matter of moving it. Because if you want to send it to a friend or send it to the exchange, you have to instruct the blockchain and say, hey, please move my Bitcoin from here to them.
But it stays on the blockchain.
It stays on the blockchain.
But it's just someone else has the ability to access
Exactly. It's a zero-sum game. The blockchain contains all of the Bitcoins in existence, and you're saying move from my account to their account.
Got it.
But how do you tell the blockchain to do it? You have to have some credentials because the blockchain doesn't recognize you.
Right.
There's no camera. The blockchain doesn't have a camera. There's no facial recognition. There's no blockchain person checking your ID. Right. So everything on the blockchain is done by cryptography, mathematics.
Okay.
It doesn't know the people involved.
Okay.
It doesn't care if you're a human or you're a pet dog or a pet cat. All it cares is if you, who is requesting the move, has the credentials, and the credentials is the private key.
Okay.
Right. That speaks everything.
Okay. So then as an estate planning attorney, like you said, with a hot wallet, that's an account. That's easy for me to understand. You can usually put accounts in the names of trust or LLCs, depending on the platform what they'll allow. With a tangible wallet or a cold wallet like this, those can be assigned into different legal entities through legal documentation, which is more or less what we've been doing.
Yeah. It would be similar to assigning, let's say you have a stash of gold coins, gold bars, or like a painting or physical bearer assets. Like let's say you have 5 cases of very prestigious red wine.
Right.
Very expensive red wine collection, or paintings, or gold bars, gold coins, things like that. This would be a similar way.
Okay.
Yeah.
All right. Well, that's very helpful. I appreciate the explanation. And so let me think if I have any more questions about the blockchain. So I guess, how does that play into mining? I hear about mining. Is that still, do people still mine for Bitcoin? Or is it not all been, I guess, collected or
So
discovered?
it is. You're absolutely right. So today there are about 19 million Bitcoins in existence that have been surfaced, so to speak, in circulation.
Okay.
Now,
how many
I told
were there
you
total?
Total is supposed to be 21 million. 21 million total.
Okay.
So, but that's the planned total, and that's a hard cap of 21 million.
Okay.
So there's roughly 2 million that are still buried under the ground, under the virtual ground, that has not been unearthed yet.
Okay.
Okay. And the remaining 2 million will come out over the next 120 years. It's going to come out slower and slower and slower. Okay. For the last 13 years, it's come out pretty fast. The next 120 years, it's going to come out slower and slower. So there's a sort of a decay rate. Okay. So maybe in the next 20, 50, 30 years, we'll get very close to 21 million. And then for the last remainder, will take another 100 years to come out.
Okay.
Does that make sense?
Yeah, it does.
It's a little bit weird concept.
It is. It's making more sense now. Hearing you talk about it, this is really, I think, helpful for me. So when people, I guess the last 2 million you can't mine those out. They'll just somehow come out. Or
no, mining is a process where they come out.
Them. Okay.
So it comes out and then it goes to the people who are mining it.
Okay. How do you mine?
Okay. So mining, by the way, the word comes from traditional mining of gold and silver, diamonds and steel and metal, nickel, whatever, right? That's traditional mining in traditional what they call commodities industries. So the word mining was borrowed from that definition and applied to Bitcoin. And the reason is it's similar in the virtual sense. Bitcoin, the creator, Satoshi Nakamoto, he had to decide who gets the 21 million Bitcoins. Okay, so who should get it? This is like 13 years ago. This is very historical, okay? So if he had given himself the full 21 million Bitcoins, it wouldn't have worked because no one would want to play his game.
Okay.
On the other hand, he was also not possible to give the 21 million Bitcoins to the poor people or to the people who are in need. Because it's hard to identify who's in need and who's poor when you're looking from the perspective of the blockchain on the internet, because they're blind. The blockchain itself cannot distinguish between people, gender, race, ethnicity. It can't do any of that. Right. So the only way that he thought was fair was to make it a lottery.
Okay.
A lottery where anyone in the world using computers and programs can come apply for a lottery ticket. Okay. And what you do is you contribute, you run a program, a special program. You do one calculation. Think of it as a math calculation. What's like 7 plus 2? So 7 plus 2 is 9. Well, you get the answer right, and then you get one lottery ticket.
Okay.
And the next question might be, what's 8 minus 4? Well, 8 minus 4 is 4. So you get the answer right, you get another lottery ticket. So the more lottery tickets you win, the higher the chance of you winning the prize.
Okay.
So every 10 minutes, this is back then, 13 years ago, every 10 minutes, the prize would be 50 Bitcoins.
Okay.
And it would give out 50 Bitcoins every 10 minutes, roughly, to a winner of the lottery ticket, and people would mine. In the beginning, it was just Satoshi Nakamoto and himself. So he would get all the tickets, he would win the first prize. He would win the second prize.
Got it.
And then when more people joined, more people get lottery tickets, and more people would win prizes.
Okay.
So today, 13 years later, globally, there are thousands, if not tens of thousands of people mining Bitcoin. They're getting these lottery tickets, and they're getting probably millions of lottery tickets per 10 minutes. They're getting not just hundreds of thousands, even millions of tickets.
Okay.
Right? So if you use a computer that's really fast, you can get a lot of lottery tickets.
Okay.
By getting a lot of lottery tickets, you have a higher chance of winning the prize.
I see.
And the prize today is no longer 50 Bitcoins. It's only 6.25 Bitcoins.
Okay. Yeah. And so at some certain date, then there'll be
fewer and
they'll
fewer.
release the winners of the lottery.
Yeah, exactly.
Okay.
So every 10 minutes, the system announces the winner, says, okay, this ticket won. He or she gets 6.25 new Bitcoins.
And those are just
sent to that winner.
The credentials to access them on the blockchain.
Exactly.
Okay.
Sent to that winner. And then the next 10 minutes, maybe none of the winner. So you can actually go buy a machine to do mining.
Right.
And if you're lucky, you could win the 6.25 Bitcoins.
Okay.
Now, however, practically speaking, I can assure you that this is no longer practical for individuals to do mining. If you're, however, if you're an industry, if you're a company, you have industrial scale, you want to spend millions of dollars in these capital expenditure sort of hardware machines running, using up a lot of electricity, you could set up yourself for mining. But as an individual person sitting at home or an apartment, it's not practical.
Just can't, yeah.
Yeah, or if you do it, you get maybe like $5 worth of Bitcoin a day.
Okay.
If at all.
Yeah. So speaking of how much energy is consumed, and you address this a little bit, I think, in your book.
Yes.
You know, Elon Musk recently saying it's not sustainable, or maybe I'm misquoting him and you can correct me, but the concerns about whether or not we have sufficient energy, I guess, to really make Bitcoin work. Is that something you can?
Yeah, I can talk about it. I'm not too concerned.
Okay.
The reason is, in a sort of democratic free market society, people use energy however they want. By the way, however someone uses energy is a matter of perspective and judgment, right? I just found out that you own a Tesla. You use your energy. You charge your Tesla with electricity. Right. Some people have washer dryers at home. They wash their clothes with electricity. And some people put up Christmas lights, which consume electricity.
Right.
And some people set up a mining farm for Bitcoin mining, which also consumes electricity. Now, who's to say whether the Tesla driver or the person who's washing, drying their clothes, or the Christmas lights person or the Bitcoin miner is using electricity fairly? right? Because in the end, they all pay for their own electricity.
Right.
So who's to say, it's a judgment thing, who's to say, oh, I use it, it's fair for me to use it for my use, but it's not fair for you to use it, right? So I'm a big proponent of free market, let people do what they want to do.
Right.
If you're concerned about like the green energy and the burning of fossil fuel, I think governments and regulators should concentrate on the source of the energy, where the electricity is made.
Right.
Maybe you should ban coal, ban fossil fuel, and promote renewable solar, wind energy, or maybe even nuclear energy that's cleaner, right? So it's a spectrum of what you can do, right? But in the end, the amount of energy consumed by Bitcoin will never exceed the total amount of energy in the world, because people always find a use for it, whatever they want.
Right.
Yeah.
Makes sense. Yeah. I didn't quite understand how that all played out. And so I'd heard that comment and wondered what that would mean for the future of Bitcoin. But that explanation makes sense. So
yeah.
Where do you, in the short term, what do you see happening with Bitcoin versus long term? Can you tell me a little bit about how you feel about that?
Sure. In the short term, we're seeing a huge market correction, right? We see the Federal Reserve announcing higher interest rates, raised by 0.75%. So it's a huge interest rate increase, never, in the last one or two decades. We're seeing huge inflation. That's why the stock market has been falling a lot, right? Correction. And we're talking about recession, maybe people worried about that and all that. With all of that, with the liquidity crisis and contagion fears, cryptocurrency has taken a beating. Very honestly, Bitcoin had an all-time high last November, $69,000. It fell down to 50 to 40,000 to 30,000, and it's touched almost $20,000. So it's come down 2/3. Lost 2/3 of its value in a short 6 months.
Right.
That's crazy. It's very volatile. That's a short term, medium term. However, in the long term, I am super bullish on Bitcoin, and the reason is because Bitcoin is a global. It's the most recognized and the default global reserve digital asset class.
Right.
It has a circulation value of around $500 billion, half a trillion. By the way, for one person, $500 billion is a lot of money.
Oh yeah.
But for a global asset class, $500 billion is nothing.
Right.
Think about all the real estate out there. Think about all the gold, the silver, the diamonds. Think about all the stock market, all the stocks in all the stock markets in the world. Think about all the derivatives in the world. Right. Those are all multi-trillion dollar assets, hundreds of trillions. Right. So for that reason, Bitcoin, in my mind, is underappreciated. I think one day Bitcoin cryptocurrency will rival the largest asset classes in the world. And that's why I think Bitcoin can go up to 100 times, go past $1 million.
Yeah.
$1 million for one Bitcoin. Definitely go past that.
Wow.
But it's not going to happen this year.
Right.
It may not even happen in 3-5 years, but I think 15-20 years certainly will happen by
Really?
then.
Okay.
Yeah.
So that's not too far away.
Yeah. So if you have that time horizon, I think it's a great investment.
Yeah. Yeah, that makes sense. So that's very helpful. I learned quite a bit, and you've really helped me make some sense of a lot of the things that weren't quite connecting for me. But I want to go back to the cold wallet and just again approach some things more from an estate planning standpoint, and see if you have some thoughts on the best ways. I mean, it sounds like it's probably this cold wallet to make sure things transfer from one generation to the next in a secure fashion. Yes,
I'm very much thinking about that because the Bitcoin investments I've made, I know for sure I won't be able to spend that in my lifetime. So I want to transfer it to my descendants, to my kids and grandkids, right? So for that reason, that's partially why I created Ballet. I wanted a solution that I can use myself and other people can use as well to transfer their digital Bitcoin assets or cryptocurrency assets from a generation to another generation. And I think this is the single best way to do it because this is a physical bearer asset. You load it in here, you can lock it up in a safe.
Okay.
The safe can be held in the bank, or there's special, very high-end custodians with very secure vaults. You could put it in there, and then they have accounts and all that, and they'll have you write down your beneficiaries and all that stuff. And you can even have it custodied or titled, rather, have the safe accounts titled to a trust.
Okay.
Right. To a living trust or asset protection trust or whatever estate planning trust. Right.
Right.
So you could do all of that stuff. Right. So So I think it's a great way to really hold possession and transfer assets down generations. And most importantly, you can even buy insurance for it.
Oh,
right?
really?
So it's very good.
Are there other companies then out there like Ballet doing this, or are you really the only company offering this kind of solution?
Well, so we have we're a unique solution in the market in terms of physical bare asset hardware cold storage wallets. We're the unique solution out there for this. Many other hardware wallet makers have more complicated electronic setup. They have recovery seeds and passphrases.
Okay.
So a little bit more intimidating for the casual user.
Right.
I myself know how to use those devices, but I don't recommend them for you or for regular folks. Okay.
Right.
And then in terms of there are other companies that do custody, right? So for example, Coinbase has a program called Coinbase Custody. So they would help high net worth individuals, help companies custody their digital currency assets. So that's also a titled way to do it.
Okay. Yeah. And so Coinbase, though, I guess what are the pros and cons of just sticking with, say, I just want to use Coinbase and I'm happy with Coinbase versus using Ballet? Is it just the fact that because you could get on a Coinbase account with just some standard login credentials,
yes.
right?
So there's pros and cons. Okay, with Coinbase it's pretty simple. You don't have to pay anything. With Ballet, you have to pay money to buy the wallet.
Okay,
right. Buy from Amazon or from our website ballet.com.
Right.
But for an exchange like Coinbase, you would get it for free. You set up an account, and you would protect it by username, password. You would also set up a mobile phone recovery. You might set up a SMS message or a two-factor authentication.
Okay.
But in the end, what I warn people is, if you don't secure all of those things properly, you could get hacked.
Right. Oh, okay.
Right. There's a lot of instances of people getting hacked because they got their phone SIM card gets hijacked by hackers.
Right.
Right. People who break into your email account and retrieve your email credentials.
Okay.
People guess your password.
Okay.
Right? So all these things can lead to hacking, and there's numerous examples, probably millions and multi-million dollars lost through hacking of accounts on exchanges.
Right.
I won't name exchanges that are really vulnerable, but almost all exchanges have had their user accounts hacked.
Right.
Right. Because in the end, it's the user making the mistake of not securing it properly.
And so that's the con.
The trade-off.
Right.
Now with Ballet, once you put it in here, you're not going to be hacked electronically.
Right.
However, the trade-off is you can't afford to lose this physical wallet.
It could be stolen.
It could be stolen. Right. So that's why you want to keep this in a safe place.
Right.
So it depends on your own abilities. If you think you could secure the information digitally with a strong account against hackers, then leave it on a custodial exchange. If you prefer to secure it yourself, if you have the ability to secure this yourself physically, then take it out and put it on the Ballet wallet. But when you put a lot of money on Ballet wallet, don't bring this with you.
Right.
When you go out for dinner, when you go out to the casinos, when you go out to get your car wash, don't bring this with you.
Right.
Leave it at home. Leave it somewhere safe. Right.
So walk me through again. I apologize. How do you scratch something off here? You said.
So the 2 steps.
Okay.
After you buy the wallet, there's zero setup. So to use it, you would load money onto the wallet, and that's it.
Okay.
And the way you do it is you could either scan the QR code.
Okay.
Or there's a letters beneath it that corresponds to your deposit account address for the QR code, the same thing. Or you could use your app to scan it, and then you can just copy paste the address into the exchange you want to withdraw from. So that's how you receive money into the Ballet wallet.
Okay.
And once you have money in the Ballet wallet is working for you. It's doing its job of protecting your cryptocurrency for you. This wallet will not only store Bitcoin, but stores 100 plus other cryptocurrencies and even stores NFTs. So if you're an NFT fan, you want to buy NFTs, you can store it on here as well.
Okay.
And you can have multiple Ballet wallets storing different things and put in your safe or multiple safes all around the city or all around the world.
Okay.
Yeah, that's how you do it. And in terms of what you said about scratching is there's a sticker here, right? So you would actually pull off the sticker, and on the bottom part, there's a sort of like a scratch off area strip.
Right.
Use a coin, gently scratch it off. There's some letters and numbers beneath there.
Got it.
So you need to do that when the time comes when you want to move the assets from the card to somewhere else.
Okay.
So normally speaking, for medium to long-term investors, you need to do that now.
Right.
But when the time comes, a year, 2 years, 5 years later, you would do that.
Okay.
Yeah.
And so that gives me info then, because that's not the key, right?
There's two pieces of information. There's some information beneath the sticker,
right,
in the yellow. There's another QR code here,
okay,
and there's some information beneath the scratch off.
Okay.
The two pieces of information, think of it as part A and part B.
Okay.
When you fuse them together, combine them, that will then allow you to create your private key. And the private key is the credentials where you move the coins on the blockchain.
Okay, so that would create the private key then.
Yes, exactly.
Got it. Okay.
Yeah. So until you do that, you don't create the private key. You leave it in there. Leave it on don't touch it. Don't prematurely peel it off or scratch it.
Right. Yeah. Okay, that makes sense. And do you foresee a day when something like this could be used as like a debit type card?
That's a great question. A lot of people assume, and maybe it's just the design of it, it's so convenient. We made it into credit card size. So people, rightly or wrongly assume that, I could take this to a point of sale and pay for coffee, buy McDonald's, or pay for my clothes at a retailer, right? So it turns out this product is actually not meant for that.
Right.
If you want to do frequent payments, you should use a softer wallet on your mobile phone.
Okay.
This wallet is really meant for long-term investment storage.
Right.
Yeah.
So there are options like that, though?
There are other products that are more suitable for payments.
Okay.
This product is actually non-electronic. There's no chips in here, no magnetic stripe.
Okay.
No secure chip. No NFC, Bluetooth, nothing.
Got it.
It's really, I call it really, really inert.
Okay.
Right. It's just a piece of metal with information on there.
Got it.
And this really keeps it simple, so there's no maintenance.
Right.
Zero setup, zero maintenance.
Okay.
Yeah.
I wasn't aware there were other options where you could use Bitcoin almost like it is fiat currency. Then
you could.
Who accepts
you
it,
could.
right?
You could. There are other options. I personally don't see it that way.
Right.
Because for me, Bitcoin is an investment for long term, for high gains. So I'm not. For example, when I buy Bitcoin, I'm not looking for the 5% return.
Right.
I'm looking for the 500% return.
Got it.
Right. So when it goes up 5%, I'm not ready to sell it. Not yet.
So do you plan? So I feel like I've heard about options or strategies where you maybe wouldn't ever sell it and you might just borrow against it. Is that?
I've heard, yes, they're starting to do that. That solution is really for the wealthy. So if you really have more than $1 million of cryptocurrency, you may want to utilize services where they lend you money based on your cryptocurrency. But in all those cases, they ask you to surrender control of your Bitcoin currency, of your Bitcoin cryptocurrency to that company that's giving you the loan. Okay. So it's an asset-backed loan.
Right.
So you're saying, I'm going to hand this to you, give me the loan, and then if the price goes down, they might clear it out your Bitcoin, or if I don't repay, they might clear out the Bitcoin.
Right.
So it's not something I personally recommend, though it is something some people do, but it's really for the rich. Makes sense. This point. It's because if you have like $2,000 worth of Bitcoin, no one's going to give you a loan on that.
No. Yeah, that doesn't make sense. Are there reputable companies doing that, or
there are? I don't happen to know any, so I'm not going to give any recommendations on this show.
Curious if there were any at all. I'm not necessarily looking for recommendations because I won't have $1 million plus of Bitcoin anytime
maybe in
soon.
a few years you will. Maybe in a few years you will.
Yeah, that would be great. What about another term I've heard that I don't quite understand is nodes?
Nodes. Okay. So these are called Bitcoin nodes, right? Okay. So basically, the blockchain is this concept of all the storage of all the ledger for people who have how many Bitcoins and how many accounts. So that collectively is the Bitcoin ledger, the blockchain, okay? And nodes are the machines on the internet that run the Bitcoin program. So today on this planet, there are hundreds of thousands of machines that are running the Bitcoin program, all talking to each other, all maintaining a copy of the Bitcoin ledger. Okay. So the Bitcoin ledger keeps track of all the transactions, who sent money to whom, how much Bitcoin's in that account, how much is in here. They don't know who owns the account because it's pseudo-anonymous. Right. They won't know it's Bobby Lee or Jeremy Cooper, but they will know that it's got this account number 123 ending has this amount of Bitcoins in there. Right. And then it keeps track of that and makes sure everything adds up. So there's no fake Bitcoins being created. Right. So all these computers are called nodes. So that's what node means. A node is a Bitcoin full node, is a computer that runs a Bitcoin program that keeps a copy of the Bitcoin ledger, which is the whole blockchain for the Bitcoin. So
how I guess this is where I get a little fuzzy too, is how is this all policed? It sounds like it's everyone.
It's self-policed, yeah. Because what happens is the programs all talk to each other. They may be running slightly different versions of the software, but in the end, all the Bitcoin blockchain data has to be compatible. They have to make sure. So if, for example, if yesterday someone sent you 2 Bitcoins, your account should have the incremental of 2 Bitcoins and their account should have a decrement of 2 Bitcoins.
Right.
And everyone in the world will see the transaction, will verify that they used a private key to send it, and it's all legitimate.
So
right. So we don't want you to spend more Bitcoins than you have. We don't
Right.
want them to spend more Bitcoins than they have. So it's all kept in synchronicity.
And there's enough parties involved in this that are monitoring it on that granular of a level.
Absolutely.
Really?
And that's what these programs do. These programs are
Programs
very
themselves
detailed.
do it? Okay.
The program does it. The program's running on a hardware, and the whole thing is called a node.
Okay.
Right. So the hardware is like a PC computer running on the cloud or whatever, or even at home you could run a computer to run the program. And the program will be very detailed and diligent. It will check all the transactions to make sure everything is legitimate and not fake.
And so I imagine people in the past have tried to, whether by accident or intentionally, send Bitcoin
Twice.
Right.
Yeah. So that the program would catch that.
Okay.
Right. It's no different than if you have a $100 bill, you can only buy $100 worth of stuff.
Right.
You can buy $80 worth of stuff, you get $20 in change, but you can't spend $101
Right.
with a single $100 bill.
Right.
So the program would check that. If
Yeah.
you spend the money if you spend 80, then your balance should be 20
Okay.
at this point. And then the program would check. If you try to spend 19, it will let you do it. If you try to spend 20, it will let you do it. But if you try to spend 21 or 25, it will deny you because you just spent $80 out of your 100.
It's just similar to online banking and trying to transfer funds from an account when
Yeah.
you don't have sufficient funds available.
Exactly.
It won't
Now,
let
the
you.
difference is in the online banking case, a single bank is doing all the checks.
Right.
In the Bitcoin case, you have thousands of computers all around the world checking it for you.
Right.
So that's what decentralization means.
Yeah, no, I like that concept, and especially the way you talk about it in your book, because I deal with banks quite a bit.
Oh, yes.
And I like a lot of the people at the banks, but the banks themselves and their procedures and institutionally speaking can be very difficult to deal with. And
Absolutely.
your whole
Tell me about
example
it.
of trying to withdraw the cash for the poker tournament and how difficult that was for you, it just resonated with me. And it's like you said, I mean, that's your money. Why does it have to be so difficult to withdraw it?
Yeah.
And there's all kinds of similar type examples I can think of. And I get it. You know, they're trying to protect customers and prevent illegal activities. But when you're not falling into those categories and you just want to withdraw funds or even deposit cash, how frustrating that can be. And the fact that there's maybe an alternative, maybe not a exactly parallel alternative, but the idea of decentralizing things to give alternatives and have more freedom to deal with your assets is, I mean, I really like that Bitcoin presents that opportunity.
Yes. Yeah. In fact, I just share a quick story. Today, or just this week, I had another bank transfer crazy story. 2 days ago, I initiated a bank wire transfer to a company. The company name was really long, so they could only input the first few characters or the first 12 characters of the company name. And then 2 days later, today, I got a call from the bank. The wire transfer did not come through. It got kicked back because the name did not match. I'm like, the name doesn't match because there's only so many characters you can type in, right? So it's really annoying.
Yeah, I've dealt with that. I send a fair amount of wires on behalf of clients. And I think you even talk about how you sat in the bank for an hour plus dealing with the wire. I've been there, and it drives me crazy. It sounds like with Bitcoin, you could do these transfers, and I didn't quite understand exactly how long it takes to do them. So maybe you can talk a little bit about that.
Yeah.
Like if you're just wanting to do a transfer.
Yeah. So
you walk me through that
process.
process.
So maybe we'll have that as a last topic today for today's podcast. So with Bitcoin, either Ballet or not, you would use a program, right, or a hardware wallet program where you would tell the program, you say I want to transfer my Bitcoins to another address, and you would specify the destination address. So it's an account number. There's no name tied. There's no real name tied to it, but it's just an account number.
Okay.
You would paste that account number in there. Whoever is sending you whoever wants to receive the money. And then you would tell it how many Bitcoins or how many amount of what cryptocurrency to send. You type it all in, and then eventually ask you to prove the private key. So the wallet software might have the private key, or you might have to type it in yourself. In the case of Ballet, you would show the two pieces of information, the part A and the part B.
Okay.
Once you do that, it would give you a preview. It says, are you ready to send? This is who you're sending from, your account to their account. How much? Are you ready? And press send, and it will go out.
And it's instantaneous.
Instantaneous. It'll go out. Yeah.
And so the account number for the recipient account, where is that? Just their like hot wallet account?
It would just be their wallet. It doesn't matter if it's hot wallet or cold wallet. It would just be their
could
wallet. It could be an exchange. It could be a private wallet. It could be all that stuff.
Okay.
Yeah.
So and I apologize if I know we need to wrap up just real quick.
Yeah, please.
So there's hot wallets, cold wallets. Besides that, so for people before there were hot wallets and cold wallets, it was just people had their private key. Somehow.
Well, they would have not the private. They had the Bitcoin program. From the early days, the Bitcoin program itself was a wallet that managed the private keys. As humans, we don't deal with the private keys. The private keys are all hidden behind the interface.
Okay,
it's all inside the program. We just deal with the addresses.
Got it.
Yeah, and we might have a passphrase to allow the hot wallet to send out the Bitcoins.
But I would imagine people are out there that still hold Bitcoin like that. Not everyone.
Absolutely. Right. Yeah. So I encourage them to migrate them to newer wallets, safer wallets.
Seems like that's an easier way to facilitate the use of Bitcoin. So it makes sense.
Indeed.
So
very good.
Well, that's been very helpful. I really appreciate you letting me ask you all these questions in a very non-threatening manner. It's been helpful. I might have repeated some things, and I apologize for that, but it's really
not at all
been helpful, and I think I have a much better handle on Bitcoin now.
Yeah, thank you, Jeremy, for coming on the show.
Absolutely.
It's been great. You've asked some real-world questions by real people, and I think the questions and answers, hopefully it's useful for the community, okay? So thank you. This is Bobby Lee Bitcoin. Thank you for joining my podcast, and see you all again soon.